Alright guys, I'm jumping in here today because I wanted to do a video on whether or not a home is a good investment versus other assets, right? Um, I know a lot of us are looking for homes out there, especially if you're a millennial, and it's super difficult right now to find anything that's affordable, whether that's even worth buying. Especially where I am in the South Florida area, it's extremely difficult. And so I started to get more and more into this because I started try to figure out whether or not it really was a good investment or a good idea. Obviously, everyone tells me, of course, you need to buy a home. This is the best thing you can do. It's a great investment. Why throw your money away at rent, et cetera, et cetera, right? We've all heard all those people pushing us to get homes. So I wanted to really get into the weeds on this and look at the actual numbers on whether or not buying a home is actually a good investment or not. Obviously, there is a sentimental value to it. If you're trying to start a family, or you're getting married and you want to find your first home, whatever, that's different. If you want to actually buy a home for a long-term investment, and you're thinking about it being kind of a nest egg later on in life, I think it's important, especially with your first home, because it is such a huge down payment. It is such a huge first investment. For me, anything that I'm putting money towards, I want to see some kind of return. If not, it just doesn't make sense, right? So I wanted to get into the weeds on whether a home is a good investment, especially now, right, with the way things are with the real estate market, and looking at other assets in comparison, right? The stock market and Bitcoin. This is, at the end of the day, a Bitcoin channel, and I want you guys to see the difference between whether investing in a home is worth it versus investing in other assets like Bitcoin. So I'm going to show you this home here. This is an actual home that's on the market right now in South Florida. I was actually looking at it recently because I was interested in potentially getting into this home. And I know, if you're other parts of the country, this seems like a lot of money, $549,000. But where I live, this is really an average home right now, which it is a lot of money. This is why we're kind of priced out of the market, because it's like these homes are so expensive at this point that you have to really second guess any investment that you make in one right now. So I want to take a look at this real home that's actually on the market right now, break down every single number, and we're going to look at the very best case scenario, right? Very best case scenario on investing in this home, so you can see how much you're actually making over a 30-year mortgage on investing in this home. Okay, so this is a home, like I said, down here in South Florida, and I didn't put the address because obviously there's somebody trying to sell this house, and I didn't want to, hinder that in any way. It is really a beautiful home inside. You can guys see this; it's really nice. But it's going for $549,000, which again is not a bad price right now for where I live, especially with the renovations that they have and everything, right? So even for this average price of a home, right, we're going to start looking at how much it actually costs to be able to get into this house, right, and be able to live in it and own it. So you got the property price at $549,000, right? Then you have a 20% down payment, and I'm putting a 20% down payment because, like I said, we want to do best case scenario. Let's say we have 20% that we can put down, and we put that down. We want to do that because that avoids a mortgage insurance. It lowers our interest rates, right? It gives us the best case scenario. It helps us out across the board. So let's assume that you have 20% that you can put down for this home. Okay, so that 20% is going to come out to $109,800. You can see that up here, the formula. Okay, then on top of that down payment, you've got to put in closing costs, which is a separate cost altogether when you're buying a home. So the closing costs, at least where I live, the average is between 3 to 4%. So I put in a 3.5% closing cost. Okay, so already we need to come up with $129,015 to be able to afford this home. Okay, and look, again, there are ways to put a lesser down payment. You can get an FHA. There's a million other things, but again, that really changes your cost down here, and we'll go through that in a minute. But right off the bat, you got to invest $129,015 today, right? August 19th. Okay. On top of that, you have all these variables, right? You have your interest rate, which I'm only putting at 6.25%. Again, I'm looking at best case scenario. This is assuming you have incredible credit, okay? You have, especially today, with the interest rates where they're at, 6.25% interest rate is a very good rate, okay? We're also looking at the assessment tax rate. What that means is the value of the home will be assessed every few years, and they will adjust the value of the home, and that home value adjustment will change your taxes. So if that value of that home gets increased, your taxes will proportionally increase with the value of the home. Okay, so on average, there's kind of a cap rate of 3% where they say we will not increase more than 3% annually. So I've put it at 3%. Okay, so we've set that at 3% because that's a very standard across the board. 3% is the normal rate year over year of tax assessment. Okay. The average equity over the last 20 years, and what that means is the average growth or value of the home price is about 4%. So year over year, your home should increase in value by 4% naturally through really inflation is what it is. So you have this at 4%, and I got this off of a 20-year census on ChatGPT, showing me 4% is the average here in South Florida over the last 20 years. That's the average equity growth year over year, okay? And then we have a mortgage period of 30 years. We're doing a standard 30-year mortgage plan, okay? So those are the variables that we have here that are being included. Now let's get into the cost of actually owning this home, and you can call this whatever, holding costs, operating costs, whatever. But this is what your costs are going to look like what my cost would look like if I were to buy this home, right? So right off the bat, I've got property taxes, right? And again, I'm calculating for average, it says here, 3% increases in taxes, capped amount per Florida, okay? So monthly, I've got to pay $702.34 for property taxes. Again, for the year, that's $8,428. Now, when you see this $400,000 number, this is over 30 years, okay? Again, I'm calculating, you'll see here, it's not simply multiply this by 30. I have to take this number and I have to consider every year it compounding in growth of 3%. So actually, over 30 years, I'm paying about $400,000, almost $401,000 in just property taxes, all right? Again, that has to do with this assessment tax rate growing 3% year over year. Okay. Now, we have home insurance, right, which is a requirement, at least here in South Florida. It is at $183. I got this again off of the Zillow listing, and the yearly cost is $2,196, and over 30 years is $65,880. Now, guys, I'm assuming here with this home insurance that it does not go up, right? I didn't want to get that deep into the weeds. I just wanted to say, let's assume it stays the same throughout 30 years. As you guys know, that is not going to be the case, but just for the sake of this video, let's say it stays exactly the same. Mortgage insurance, we don't have any because we had 20% down payment, so hurrah, we don't have to pay anything on mortgage insurance. Okay, again, we're looking at a best case scenario. I know there's a lot of people out there that say, I don't have $129,000 to just throw at a property like this. Neither do I, guys. The fact of the matter is, this is a best case scenario, so you guys can see how this works. Property maintenance, right? This is at $457. Now the rule of thumb is usually I'll tell you right here, is a 1% value over the home. So you take 1% of the value of the home, which is $549,000, and I took that and I divided it by, I took the 1% and I divided it by 12. So you take 1% for the year, which you'll see here is 5,490, right? That's 1% of the property price, and that's usually the yearly cost on property maintenance. That's what you should be calculating for, and that's just kind of a rule of thumb, okay? And then I take that and I divide it by 12, and it's about $457 a month. Over a 30-year span, that's about $164,700, which, to be honest with you, there's so many things that can happen in a house You can have a roof issue that you need to change your roofing. That's a $50,000 change. You can, piping, whatever. This is easily, you'll reach this $165,000 amount. Okay. Um, so that's a very fair price there. And then, of course, we have your principal and interest, which at 6.25% over 30 years, you're actually paying $973,000, $973,440. Okay. So when it's all said and done over 30 years, you're going to spend $1,604,989.41 just on holding costs, on having the home running, right? This isn't counting for cost of living, your groceries, your light bill, your water bill, etc. I'm not even getting into those weeds. I'm just simply looking at your holding costs of this property. Okay. So now we've got a holding cost of $1,604,989. You have an initial investment of $129,015, right? Again, that's separate from these costs, right? This is the down payment, and then everything else here is your actual holding cost over the 30 years. So when we look at the summary of all of that, right, we have the down payment plus the closing, which is $129,015, like you see up here. You have the 30 years of costs, which is $1.6 million. All right. And again, guys, I'm not accounting for a lot of things. I'm not accounting for the growth of home insurance year over year, which is actually a big one right now in South Florida. Property maintenance being higher. This is a really best case scenario across the board. So you have 30 years of cost, 1.6 million, and then you have a total paid for the home of 1.734. Okay. So your home value after 30 years, and again, this is on a 4% compound annual growth rate, right, which is the average equity growth. When it's all said and done, your house is worth 1.78 million. Okay, so you spend, and again, we're talking about the same house here, guys, a $549,000 home right here. In 30 years, based off of all of these numbers and the compounded annual growth rate, okay, the home will be worth 1.7 million, and you will have spent 1.734 million. All right. So your annual return on your cash, realistically, when you start to look at this over 30 years, is less than 1%. It's 0.09%. Okay. And I was floored when I saw these numbers because I knew they were bad. I did not know they were this bad. Again, this has a lot to do with, the values of the homes right now are just astronomical. This home shouldn't be worth $549,000. It should be worth less. It should be worth $100,000 less. And that would change these numbers dramatically. But at the end of the day, even still, you have all of these operating costs, holding costs on this property that is just between the taxes, the insurance, and the maintenance, you are just getting destroyed on any potential returns that you could have had. Okay. And I know that, a simple thing is, if you're paying 6.25 and they lower the interest rates, you can always get a better interest rate later. That's definitely a possibility. But again, we're basing it off of today's scenario. And this is a very best case scenario. Most people aren't going to get a 6.25% rate. Most people's credit isn't impeccable, right? To be able to get this rate. So, if I put this at 7%, this changes everything too. I don't have it. I thought I had it linked, but I don't. It changes, right? All these numbers, and I should have connected that, but either way, it's a huge investment. You're talking about you're putting in 1.7 million, 1.734 million over 30 years to get 1.780 in return. I mean, what does that look like in dollar amounts? just so you guys can see this, because that's just like insane. It's a $46,000 return after putting in 1.7 million. You get $46,000. Imagine giving somebody 1.7 million dollars, and 30 years later they give you the 1.7 million dollars back, and then they hand you a $46,000 check. It'd be like, dude, after 30 years, this is what you're giving me? Are you serious? I mean, it's just absolutely astronomical. And again, guys, I'm not a real estate agent. I'm not a professional investor of any sort. If you guys see anything wrong with my math here, please call it out in the comments. Let me know. But from what I'm seeing here, this makes no sense. Right? This makes no friggin' sense to put your money towards this, in my opinion. Of course, if you have a family, you want to live in a home, you want to have something, and you're not thinking about it as an investment with a return of some sort, more power to you. Go for it. I totally understand. Again, I have it in my head too, that I would love to have a house with a backyard and a barbecue, and I could just hang out in my backyard, have a drink on Friday night, and barbecue a steak with my girlfriend. That sounds amazing to me, but when I start to break down these numbers, it's just like, this doesn't make any sense. It doesn't make any sense to go forward with something like this. So now that we've looked at these numbers from a housing perspective, and again, I'm not accounting living costs, so I want to be very clear on that. I want to go into what it looks like if you rent and stock market, right? Let's just go and say, all right, we're going to go and put our money into the stock market over 30 years rather than rather than buy real estate. Okay. So now let's say we take those same $129,000 that we did a down payment with and closing costs with. We have that cash readily available, right, in this scenario. Instead of buying a home with it, we say we're going to take that money and we're going to drop it into the SPY. We're going to put it into the best 500 companies in the U.S. and the stock market, and we're going to just let it do its thing. Okay. Obviously, I ran this scenario in a couple different ways. You're always going to have a cost of living. If you don't own a home, you're going to be renting somewhere, and so you have a cost of some sort anywhere you live. Unless you go and live at home with your parents, which I don't recommend. But in any case scenario, you're gonna have to live somewhere, right? So whether your money's going towards your costs are going towards your own property or going towards a rent, it has to go somewhere, right? So in this scenario, I put a cost of living of $2,500, and I'm literally just accounting for, you living renting an apartment, right? If you're renting an apartment, basically everything's paid for. $2,500 is fair. Again, I'm not counting for variable costs. I'm not talking about groceries. I'm not putting in going out, anything like that. I didn't put that in the real estate scenario either, right? So I'm just trying to be fair across the board. Just simple, your rent and living expense, okay? So in this scenario, it's $2,500. I thought was very fair, just for a rent. At least in where I live, that's a fair rental rate for a decent sized apartment. Right, and then your annual cost is $30,000. Again, though, I need to consider over 30 years rent rise, right? So I have these variables here, which is, again, rent rise, and the average here in South Florida is 3.8%. So it's about the same as equity in housing market, right? And then over a 30-year timeline, what that looks like. So over 30 years, if you just rented, you would spend $1.6 million in your rent. Now, that sounds crazy too, because it's like I just literally threw away $1.6 million and I have nothing to show for it if you didn't buy any type of asset, right? Whereas in the other scenario with real estate, yeah, you put $1.7 million in, but you actually own a home now, okay? So then there is a difference there. I'm not trying to knock real estate 100%. I'm trying to I did this for just a brain exercise and just trying to figure out what actually is the best way to invest. Okay. So again, we do spend the 1.6 million either way because we have to live somewhere, right? So we have 1.6 million here. that we put towards rental. Um, but again, we took the $129,000 and we parked it in the stock market. Okay. The stock market has an average annual growth rate of 10%. And this is well documented and well known, right? So at that annual average growth rate, okay, compounding, you have your final returns of $2.2 million over a 30-year span, okay? So this is actually a much better return, right? Even if I consider this 1.6 and I take the difference, because it's cost in general, right? I came back with $623,000 after it was all said and done. I sacrificed not buying a home. I walked away and I said, you know what, I don't want a home. I'm going to just go ahead and take this 129 that I would have put towards a down payment and closing costs, and I'm literally just going to put it into the stock market, let it do its thing, and live my life in renting $2,500. Okay. After that, you have $2.2 million to show for it. And when you look at your cost of $1.6 million for taking the sacrifice, you made a return of $623,000. Much better than real estate. Just right, quick comparison here. Again, $46,000 you're left with after all that time. Your value of your home is 1.7 million. And again, guys, I'm going off of averages here. Housing market could, in your area, explode. There could become an Austin, and all of a sudden you've got all these young people wanting to move there. But I'm just trying to look at averages and be as realistic as possible. So this is the final returns of what you get just going into the stock market and foregoing the real estate route, which is not bad, right? If in 30 years you can walk away with 2.2 million, I think you have a pretty good retirement, pretty good life. Okay. So now I want to look at the last scenario, and of course it's going to be Bitcoin. And we're going to be very conservative with this look because this is not a hype channel. I want to make sure that we're being realistic with everything that we're doing. So again, if we're looking at, and I should change this color here so you guys can see this. Should put that like that. All right, there we go. Again, we're going to look at the same exact scenario. We're going to take the $129,000 that we were going to put into a down payment and into closing costs. And instead of buying a home, we're going to forego that home and we're going to go ahead and buy Bitcoin instead. Same cost of living. We have to live somewhere. Our rent is $2,500. Our cost over 30 years is about $1.6 million. And again, guys, I am doing the full inclusion of the rent rise over a 30 years, right? This is not just simply multiplying this by 30. You have to look at the rent rise year over year, which again is 3.8%. So we end up with cost of 1.6 million. But here's the beauty of Bitcoin, okay? At a 15% average growth rate for Bitcoin, you end up with, if you invest $129,000 into Bitcoin today, and we assume that it grows 15% year over year over the next 30 years, you end up with $8.5 million, okay? Which is 4 times greater than the stock market, and it is 8 times greater than the real estate market, okay? And I want to be very clear on this. I'm being extremely conservative with this 15%. Okay, our average growth since the bottom of 2013 to today of 2025 is an average rate of 59%. Now, I do not think that Bitcoin will grow 59% year over year for the next 30 years. I think over time there will be diminishing returns naturally. I do think 15% is very, very conservative. Let's go off of what Michael Saylor says. He says it's going to be 21% year over year over the next 21 years. So let's call it 20%. And now you're looking at $30 million, right? It's a huge difference, right? Because you're talking about compounding at 20% year over year it makes a huge change. Every percent that changes here because of compounding over 30 years, it makes a massive, massive difference. So if Bitcoin grows at 20% year over year over the next 30 years, you will end up with $30 million on a $129,000 investment. Okay. Um, Again, this is why the real estate market is why people are saying that Bitcoin is basically a black hole. It's a black hole for capital, and a lot of people are going to be moving from these traditional assets like real estate and the stock market into assets like Bitcoin. This is exactly why, right? Because as you can see, the returns on a finite supply asset like Bitcoin that is just getting adopted globally, just getting introduced into the mainstream, has so much upside potential. It's insane. And at the same time, when you look at the status of the real estate market, and you look at the cost of homes, um, and you look at what it takes to operate a house, have a house, maintain a house, the whole thing, it's just not there. It's like, why am I putting in so much effort and time into something that's just not going to even make me any money later, right? That's the way that everyone's looking at Bitcoin right now and saying, well, this seems to be the best way to make money going forward. And so that's why, again, Bitcoin is going to just start sucking the capital out of all of these other traditional assets. It's already taking mine, for example, right? Instead of buying a home, I've been investing into Bitcoin because the home prices are so astronomical. They're so ridiculous. The deposit that I need to be able to buy a home, especially where I live, is extremely high. And it feels very risky because putting in such a large amount into a home, when I know all of these costs exist and I know that over 30 years my return is going to be less than 1%, it's like, why would I do that? Right? So I wanted to show you guys this because I thought it was really interesting as I was breaking it down and doing it. I was doing this for a personal exercise, and then I thought, you know what, I should share this with the channel and let them see what I'm seeing. And again, if I'm calculating anything wrong, I'm happy to hear it. Please let me know. If I'm making a doomsday scenario here, especially for real estate guys, please let me know. But this is the way that I'm seeing it. And again, I'm open to feedback and to anybody telling me that I'm completely wrong on this. And again, I'm not saying that real estate is a bad asset to own. Eventually, I do want to get into owning some properties and having some cash flowing properties. But again, they have to be some kind of cash flowing property where I can make like a cash on cash return that's consistent. If it doesn't have that, I'm not sure what the benefit is anymore. And that's the beauty of Bitcoin over time, is it's going to start, more and more people are going to start realizing this. More and more people are going to start doing these numbers like this, and they're going to start saying, well, I should probably just get into Bitcoin. It's easier. There's less barrier to entry. I can enter with $100. I can enter with $50. I don't need a lot of money to start. And at least I can have my money in something that's growing at a rate of 50, 60% a year. In the meantime, while I start to figure these next things out and see what the hell happens here with the housing market, right? And that's what's starting to happen. All the younger generation, we want to be more mobile, right? We want to be able to live in different places. We don't want to be stuck in one particular place. Some of us, right? Some of us rather have a home where they have roots in, but for the most part, a lot of people, especially in the new generation, we want to be able to move around. And so Bitcoin allows that. It's totally 100% portable. You could take it anywhere, anytime, and you have no issues. Nobody even knows you have it on you. You could just memorize 12, 24 word seed phrase, and you can go anywhere in the world with it, and nobody even knows you have the money that you have. It's really a remarkable technology. So I did want to show you guys this. I thought it was really interesting. So if you're considering buying a home or investing in a home or trying to figure out where you should allocate your money right now, this is a breakdown of real estate or renting or stock market or Bitcoin, all of the above, and you guys can kind of decide based off of these numbers what you think is best for you. For me right now, it seems like Bitcoin is the only route until things settle down here with the housing market and these prices that are just insane start to regulate. Okay. Um, but thank you guys. That's kind of my spiel for today. I will be back on this week. I don't know if it will be Friday, but this week doing my Bitcoin buy. If you guys are liking the channel, you like the content, make sure to like, subscribe, leave a comment, and yeah, I'll be here again on later this week. Have a good one, guys.